Earlier, we told you that Baird raised its price target on Amazon by $200 to $13.10. Joining me now on the phone, the analyst that made that call, Colin Sebastian, Robert W. Baird analyst, and still with me in New York, Sean Darby of Jefferies, Jill Carey Hall of Bank of America Merrill Lynch. I want to begin with you, Colin. The call, what's behind it?
Well, each quarter for Amazon is a bit of a black box in terms of specific results, but we're able to survey product and selection on the site. And what we saw is a significant year-over-year increase in Q4 in product selection, and that which is eligible for Prime shipping. That's a big growth driver, a tailwind for the business. But what we also saw at the end of the quarter is a significant decline in product availability, and we think that's indicative of strong holiday sales for Amazon. So compare that with a strong finish in the last 2 weeks of December from e-commerce data, and we feel very good about Amazon here ahead of their Q4 results.
Well, Colin, what's the message here? That the big can just keep getting bigger through 2018, that the gains of 2017 were justified and the fundamentals are there for this to carry on?
Yeah, if you look back, obviously strong outperformance among the internet platform companies in 2017. Most of that was really driven by revenue upside and profit growth, not valuation or multiple expansion. So we still feel very good about companies, not just Amazon, but also Alphabet and Facebook. They're continuing to consolidate market share, and a lot of the growth is coming from innovation and technology, things like artificial intelligence and augmented reality, and these companies are probably the best position to take advantage of that given their engineering focus and resources.
Colin, we've seen several finds come out of Europe, come out of Brussels. We've seen a lot of talk, politically speaking, down in Washington, D.C. about the future of these tech companies. If I ask an analyst or an investor, what's the potential headwind for this sector, they'll say it's Washington, D.C. and it's Brussels. Do you actually see that materializing anytime soon where it has a significant bite out of the bottom line?
No, we don't look at it that way. I do think that there are risk factors associated with regulation. I do see those more being headline risks than actual business risks. Keep in mind, Amazon, for example, still has less than 5% market share. So any issue or risk around antitrust seems fairly unfounded at this point. For companies like Google, they are trying to address some of the concerns around market share in Europe specifically. Facebook obviously needs to address privacy issues and issues around the news feed. But overall, the benefits, the growth to these platforms is being generated, I think, by technology and by their superior products rather than any sort of issue that needs to be addressed by governments.